timeline and the delivery of winter 2013, do you think that we've had one recall of a product already, we cannot have another one, so are we really certain that that's going to give us enough time? But also, in your recommendations, did you also consider perhaps delaying the product until the following year?
Right, thank you for your question. It's a very valid question. How our group came up with the project is actually a continuation of our previous recommendation. So, in our previous recommendation, what our group actually recommends John to do is to prioritize their brand equity in dealing with the faulty spaceship point. And in launching our campaign of recalling the faulty spaceships and as well as giving refunds to the consumers, will be launching the campaign will be launched in the from December onwards to around the period of May, and that is where we will seek to, try and establish and maintain our relationship with the retailers as well as the end consumers. So we hope that, our new product launch will be revitalized products of our faulty spaceship point with a new idea and new design, and it's sort of part of our marketing campaign in building up our brand in this area.
Right. And also in addition, we noticed that there's a fad in the toy that is being produced. They are fashionable at the moment. And so while the market is still young, where there's still opportunities for new entrants to come in to capture a share, I think this is the point where Job needed to act fast before Fedbrain or other toy makers saw the opportunity and already established an even greater foothold in this industry. So we feel that speed is the essence for us to capture a greater demand.
I wanted to ask about the sensitivity analysis. You had a 5% either way, I think, on the sales price, which I think is roughly about €2 per unit. Firstly, do you think that is enough? And what are the 2 or 3 biggest factors, do you think, in what your end selling price to the consumer will be?
Thank you for your question. Regarding the first part of the question, whether the sensitivity range is big enough, we considered raising the bars to 10%, but what's the limit, right? So that 5% is a sufficient amount because we are not just selling to the retailers, we are also selling to the wholesalers. So we need to give a good margin and comfortable margin for both of these type of consumers. So as you can see from Jake's recommendation, what we are selling to the distributors are actually like about $4 margin for them to sell to their own retailers. While for our own retailers, we are offering them sort of a higher margin. So there's sort of a compromising, and 5% will get us in between the distributor and the retailer's price. So that's why we set the level at 5%. And for the second question, do you mind if you have
okay? I think the second question asks whether how do we determine what's the final selling price of the product? Am I right?
So what are the 3 factors that would influence setting your finals for you? So you can't really set your finals.
Right.
What are the 3 factors that would influence that price?
Okay. All right. I think the first one, I'll pick the first one. The first one will probably be brand equity, how the market perceives Job's brand to be like in the market. We know that Job perhaps has taken a hit in the market image because of the 40 spaceship. And so one factor, one variable will be how successful the PR campaign will be to establish, to rebuild Job's reputation in the market. And so if that was a success, I think once the market price or view Job as a premium toy producer with his rival, then we'll achieve a higher price in the market by the time of reach December 2013.
On top of that, our current price is actually at €32 to the retailers, and that was meant to actually allow our wholesalers to earn a fat enough margin so that they'll be interested in the brand new product. And as Wanson has mentioned earlier on, this is important because we need the speed to enter into this niche segment of electronic toys that can be modified. So if we are able to sell well to the wholesalers, that's also another consideration.
Yeah, and in setting the price, I think because they have been covering the top and the base, what kind of price we should set, and in terms of the bottom, the minimum price that we should set, it will be the unit variable cost that is incurred in producing the toy.
Right, just to add on to her point about because when we go down to Bulgaria, it's our first year in there, so the distribution cost and actual cost savings is not actual our experience. So we have to adjust based on our the monthly actual results. So that will be one factor that we have to factor in when we launch our product in the winter.
Just continuing on the theme of costs, we've been given a production cost. How confident are you that production cost is realistic?
Thank you for your question. The production cost is set as 20, right? So when you look at the previous products of average product cost, I would say that for this given range of product that Jot usually produce is a reasonable estimate. So, but at the same time, we recognize that there might be a variation. That's why in our sensitivity analysis, we provide an upside of 5% and a downside of negative 5% in a way that we will take into account, if the cost inflation actually goes beyond 5%, can we actually handle that kind of economic deterrence, right?
The additional post-production costs, the marketing and distribution,
right.
What thoughts on that? How would that impact on profitability?
Right. So based on what we have said, we have actually taken into account into the net profit that we have projected as well as the valuation, because what we find in Jot's financial statements is that most probably the marketing expense will go under administrative expense. So what I did was I would average out what's the financials, and that would be like around 20% of the Jot's total sales. So that's factored into the net profit that we shown in the slides.
And finally, just we have obviously looked at risk factors, and if we take a look at the Ansel matrix, you can sort of consider that at all in terms of diversification of new product into a new market, very high risk.
Right.
Thoughts?
So I think it goes back to the same point as previously in the first round when we talked about application. This is the same thing. It's also a high risk part of business, but sometimes it is necessary when we look at the bear and the base case. In the bear case, where we start to lose our market share in the 9 and 11 years old and the 5 to 8 years old segment, that will actually deteriorate the business in the future, and it will even make Jot irrelevant, like Kodak in filming and Nokia in mobile phone, smartphone. So despite the high risk, we see that in the sensitivity analysis, we know what kind of risk we're taking, and we believe that with Jot's expertise as an electronic toy maker and also with strength in licensing, they should be able to push out this new product well.
Yeah, and in fact, it is not that much of a new product and in a new market, because Jot already has some competitive advantage and niche in producing electronic toys. It is just slightly different from the kind of toys that they are used to manufacturing. And in their home market, the European market, where they actually plan to introduce these toys, there are already existing circuit toys. And what Jot does is that it just slightly differentiates its toys by introducing a mobile element to the toys. So it actually fits in very nicely, because there is already a current demand for the toys, and they're just building on that demand by introducing a new and refreshing toy to their consumers. So that in that sense, the risk is also mitigated.
So how new is the toy? Bearing in mind that it's based on an existing product idea, could we not be involved in any sort of litigation?
Litigation?
That is where we in our recommendations, we have safety regulation protocols in front. So before we launch any product, before we do any designing, we will make sure that we will revise our safety protocols and our safety control. We will reinforce that department, and that's the first priority that Jot has to do because of their prior experience with the faulty station point. So I believe that would have contribute to the fact that we are quite confident with the safety of the product when it's launched by winter.
Yeah, and in terms of intellectual property, producing this, there are already electronic circuit products in the market, but these circuit products do not have mobile elements in it. So Jot's mobile element is actually a point of differentiation in terms of having its own intellectual property and staying out of potential lawsuits with the current competitors out there. Yeah.
Thank you.
There are a couple of things that challenges Jot. Number one is going into the new, what you call that, mobile, right?
Yeah.
So not only they have no experience, they're jumping one level higher. Number two, the retailer, they're getting less margin, right? And number three, there are a lot of experienced players in the market. Now, given this, if I tell you that it's because Jot is very good in the 5 to 8 euro, and there are a lot of markets that are not exploited yet. Instead of doing this with the challenges, wouldn't it be better to go into those traditional markets which are so familiar and they're untapped? What do you think?
May I ask what are untapped segments of the traditional?
Russia,
Okay.
in those areas. There are many untapped markets still because they are very strong in Europe, the rest of Asia. Those are the areas that the 5 to 8 euro, which they have been doing day in, day out.
Agreed.
Would that be a preferable route to go? The three challenges I talked about with this new venture.
That is something that they can do in the short term. It is a safe. Okay, you may consider it more safer. Yeah, to go into the traditional markets where they are already involved in. But in terms of expanding to markets such as Russia and Asia and things like that, there's also another set of risks to take into account because they basically do not have any experience operating in such markets, and the culture, how you market your products in such market, in this market, as compared to developed markets, can be totally different. So in that sense, there is also another different set of risks to take into consideration as well. And also, if Jot were to proceed with that plan and if it were to be successful in such markets, then it also has to consider what will happen to it in the really long run when children in these markets start to get sick of the traditional toys and they start to want to look at the other toys. So if they do not start to take a bit of risk and build up their capabilities now, they can still be sustainable in the short run, but they will just die in the long run.
Thank you.